Jambo jambo, jambo watoto wa Afrika.
This is the iLEAD Africa Show, where we raise the levels of leadership dialogues. We met with Ivan Mbowa to discuss entrepreneurship and the startup culture in Africa.
An idea is not worth much. I'm sorry to say, an idea is it's only as good as you can execute it, right? And if you can execute it well, then perfect.
Ivan worked with Citigroup for 8 years across a wide variety of countries, including Uganda, South Africa, Nigeria, Ghana, and Kenya. He has a Bachelor of Arts in Economics and a Bachelor of Arts in International Relations from Tufts University, USA. Umati Capital is a startup financial services company that aims to revolutionize access to finance through the consistent and innovative use of technology. Launched in September 2012, Umati is a non-bank financial institution focused on the provision of credit and related payment technologies.
So I think when we first began, Minucha and I, we used our own funds, our own saving, and that's really critical because no one will help you as a small business before you can prove with your own funds, right? But those funds quickly depleted, and so we then ended up going to family and friends and offering shares in our company in exchange for cash to grow their business. After about 6 months, we were then able to start attracting a few institutional investors to give us funding to actually lend out to our clients. And so I would say that as time progresses in the business now, we've now done 3 years, you realize you cannot rely on your own funds. You rely on a lot more people. But I think you asked me about support. And support is not just about financials. It's sometimes about, I'd say, the coaching that you receive. I think many of the initial investors that we had, one of the best things about them was the ability to not only contribute to funds, but also contribute advice, connections, introduce you to people, make sure you get that initial meeting so you can close the deal. Our very first large client was actually, the parents of a school friend, right? Who was able, I was able to go there and say, well, I went to school with your child, and this is the idea that we have, and we really like it if you give us a chance to prove it. Support is critical, really. I'd say non-financial support is critical, perhaps more so at the beginning, and then financial support as you go throughout the journey as an entrepreneur. Without doubt, Kenya is at the epicenter of, say, mobile money and sort of more money ICT related development. A lot of global innovations are coming out of here. I think what could be done is we could have a lot more local developers begin to think through commercial solutions. Initially, I think a lot of local developers were creating, game-related content and other such things. But now, in order to really make sure that ICT kicks off, the local developers have to create applications that will be sold and used by local businesses. Right? I think that could completely change things. You sort of go from this consumer-focused IT to sort of business-related IT, where you actually have local clients paying, and then the companies such as Seven Seas and Ngani will have a lot more of those. I really think there could be a lot more local success stories in terms of people who are building IT solutions for business. I think you build discipline and willpower through tiny acts of sacrifice. So for example, I'll give you a story. I wake up every morning at 4:15. I'd like to sleep in, but I wake up at 4:15. I leave my house at 5. I head over to the gym and I get to the gym at 5:45. I then get in my office at around 7:45 to 8. I do that every single morning, regardless of how I feel, regardless of whether I have a meeting. My first meeting of the day could be at 12, but I'll still get the office at 7:45 and I'll still do my work. So I think that's actually how you sort of begin to build in some of this discipline and self-leadership. It's just putting yourself through discomfort. It sounds really strange. A lot of people say, why would you put yourself through such a situation? But that's the only way you program your mind to understand that it must do what it must do, regardless of how it feels, to get things done. It's strange because I remember before I started the business, one of my former bosses where I was employed told me, be ready to have to pay, and I was like, but why? Financial services, how would you have to pay? I think the corruption that we've encountered is discreet and subtle. It's the sort of corruption that is your deal will stall because someone wants you to ask how you can speed it up. And so have we had people come up front to us and say, pay me this to get this done? No. But have we had people block initiatives and block sales to clients because they're looking at ways of earning? Yes. Well, the good thing is, when you're still very small and there's a lot more clients out there than the ones you have, we just know very quickly, if you pay a bribe here, this is the sort of client who you'll always essentially have to pay a bribe for. It sets a very, very bad precedent. So we avoid it. If someone asks for a bribe, we just know it's a blacklist, we move on to the next one. No single client is more important than our integrity, than our reputation.
It leverages proprietary technology to provide branchless financial services to small-scale suppliers, trading companies, and industrial processors.
I think government regulation and innovation, I'm biased. I like to think myself as an innovator. And so I feel the government should ideally, step aside and let innovation happen. Going back to M-Pesa, the reason why M-Pesa was such a success was that, the central bank said, well, it sort of falls out of our remit. It's not really banking. Other regulators said, actually, no, it doesn't really belong in our space. And so M-Pesa was orphaned in terms of which regulator it belonged to, and as a result, it was able to grow. But when governments try and regulate, the case of mobile money, I think in Pakistan, other parts of the world where it's regulated as financial services activity by the central bank, it has not picked up, right? Regulators are there to protect public interest. Innovators are there to essentially improve society. And many times, improving society and protecting public interest will not merge. Those two are on different parallel tracks. So I think, in short, regulators should get out of the way of innovators. If you're creating something new, you need to make sure it's still relevant to the market that you're trying to serve. And if it's too far out, if it's too way ahead of its own time, I think it may fail. So for example, if you're in a situation where, let's say you're operating in a market where mobile money is just picking up, to then sort of make a leap and think that you can now start doing Bitcoin type transfers, you probably skipped a few steps. So when it comes to innovation, I'd say that know who you're creating the product for, know what they're using, and then think about the logical steps. Because if you bypass a number of intermediary steps and create this very advanced solution, it won't pick up. And innovation may be judged a failure, when in reality, it's not necessarily it was going to be a failure, it's just it wasn't ready for its own time.
The firm is currently focused within agribusiness supply chains, retailer value chains, and fast-moving consumer goods manufacturers.
Because I think by seeking out rejection, you're pushing envelope, you're trying to discover new things, and you won't discover anything new until you go too far, until you learn your limits. Right? If you always play it safe, you'll play in a very small, very tight space. If you're not afraid of rejection, you may discover you actually might get away with it. I can't tell you how many things that I think we went through where we just pushed our luck and were successful. I mean, even to this day, I still think that there are times when we are trying to swallow more than we can chew. Bite off more than we can chew, but sometimes it works out very well.
The fire burning, it tell them the truth, there's nothing to lose, no. You keep the fire burning.
Hello and welcome. This is iLEAD Africa, where we raise the levels of leadership dialogues. We engage with African leaders, game changers, business mavens, and the gurus of personal development and productivity. With me today is Ivan Mbowa, the CEO and co-founder of Umati Capital. Welcome.
Thank you very much.
Welcome.
Great.
To kick us off,
Yes.
tell us whether now is a good time to invest in African technology startups.
I think it's actually an excellent time to invest in African technology startups. We have a lot of things going well for us. One, a fantastic population growth. I feel that we're also moving away from technology startups that were about entertainment to solving real world problems. And because we have a significant amount of customers that need solutions to these problems, I think it makes sense for anyone to invest in African technology startups.
It is your company motto that access to capital should be guided by transparent access to information. Elaborate.
What we mean by that is we want to differentiate ourselves from traditional financial services providers in Kenya, where access to capital is dependent on your ability to provide collateral or perhaps a long-standing banking relationship. And we believe that for the majority of small businesses who we seek to serve, the number one thing that they may have is great trading history with a large buyer, and we can essentially make that the collateral to provide them working capital. So for us, it's a matter of saying, how can we potentially build technology which is used by our clients. We look at the data that's generated by that technology, and then go ahead to provide credit against the data that we've seen. And ultimately it means that we're able to move a large majority of agribusiness away from having to depend on collateral to access financing to saying, well, accessing information from the use of our technology.
You've recently said that the credit gap that Africa faces can be solved or rather can be addressed with the use of a scalable technology platform.
I think we're seeing a lot of that, and even beyond Umati, when I look around the Kenyan market, we're beginning to see operators such as Mshwari, operators such as Branch, who are essentially saying, can we potentially use alternative data points to credit underwrite, or rather to say in simple terms, to determine how much credit to give an individual that is separate from the traditional way of doing it. And definitely there you're seeing them go from 0 customers in 12 months to perhaps 1 million customers. So this is really the proof of saying that technology can provide a scalable solution for solving the credit gap. For us, what we do is essentially work with one large agri-processor, and through them and their use of our data and our technology, we can perhaps provide financing to even thousands of farmers. So it's sort of similar methodology to what you're seeing in the market in terms of players like Branch and Mshwari, and I believe that's going to continue going forward.
Okay. The young people are in love with the idea of entrepreneurship without really understanding the sacrifice and commitment it demands. What do you think it takes to be an entrepreneur?
Yeah, I think that's a really great question. I'm going to paraphrase one of my favorite quotes. I think being an entrepreneur, you have to choose your struggle wisely, because there's going to be a struggle. You'll go through so many challenges. The first one being trying to prove your concept and see, is there actually a customer willing to pay money for your good or service? The next thing you have to do is then, once you've got that first customer, can you get enough customers to break even and become profitable? And I believe that entrepreneurship just continuously throws challenges at you, and the best entrepreneurs look forward to those challenges. They overcome those challenges.
Okay. The NGOs have been said to be historically a detriment rather than being a productive presence in entrepreneurship. What is your view?
I think that's actually that's a controversial question, and I'll tell you why. Largely speaking, if your business model is dependent on NGOs entirely, I believe you are really the walking dead. That is not a business that can scale. It's dependent on donors. However, you also find some businesses that are focusing on sectors that have been ignored by traditional providers of capital. We ourselves have actually worked with a few NGOs as partners. They have potentially subsidized a few of our activities. But for example, we know that we're a pure profit, for-profit enterprise. And we believe that this is an opportunity for both capitalists, for-profit enterprises to work with NGOs to actually address a lot of the gaps that we see in the market that traditional providers of capital may not be willing to support.
Okay. Hold it, Ivan. We are going on a short break. We'll be right back.
Keep the fire burning. Tell them the truth. There's nothing to lose. No, keep the fire burning. Tell them the truth. There's nothing to lose. No, keep the fire burning.
Welcome back. This is iLEAD Africa, and with me is Ivan Mbowa, the CEO and co-founder of Umati Capital. The financial institutions have attempted to provide financial services, but the financing needs of the small businesses, such as farmers, have not been understood. What do you think are the needs of these small businesses?
Sure. I mean, I think as a small business, the number one issue you face is the need for cash flow. Especially as you begin to try and grow your business or begin trading with much larger counterparts, you find a situation where you can get orders, but you won't necessarily see cash coming from the delivery of those orders. And so we have found that traditional financial services providers are still stuck on determining credit based on rules that were invented maybe 100 years ago or even 200 years ago. And essentially, they still say, if you need cash to grow your business, I want you to give me some collateral that I can hold as security. Now, what happens when you're a small business? You're a startup. Now, let's just say you just got your first contract with a large client. You don't necessarily have the collateral to pledge. And so we really believe that small businesses will continue to be underserved by banks unless they change the method through which they actually determine how should we provide working capital to this small business. So what we have done as Umati Capital is to say, can we potentially look at who this small business trades with and instead focus our attention and our credit analysis on their counterpart so that we free up the burden of necessarily having to place collateral to access working capital from us.
Okay. Young entrepreneurs are constantly consuming information from the Silicon Valley. Some quarters emphasize that what you need is regional advice for the startup culture. What do you think needs to be tailored on the regional market and all this?
I really think that the two separate rules of the game for Silicon Valley and Silicon Savannah, as they call Nairobi. In Silicon Valley, there is a tremendous amount of capital for just about any idea that sounds feasible. Whereas over here, capital can be scarce for especially startups. So there definitely have to be different rules around how do you access that initial funding, and don't necessarily look at what's happening in Silicon Valley and believe that it'll be just as easy. I think second to that is also the idea of valuations of companies. In Silicon Valley, you can have a company that's unprofitable but has 1 million users. And so they essentially value the company based on users. Over here in our markets, we're really focused on profit. You won't get a good valuation unless you can show investors this is a business that's either about to reach profitability or is already at profitability. And I think a third thing that's really different about Silicon Valley versus Silicon Savannah is, the societal attitude towards failure. Failure happens in a lot of new businesses. I think that they're a lot more forgiving in Silicon Valley. Over here, I think a lot of young people are scared to take on entrepreneurship because if you fail, society will not judge you kindly.
Sure. Although there is inadequate funds, the lack of an investment pipeline for African startups is a bigger problem. What do you think needs to be done right?
Well, maybe let me first address that question by sort of looking at the lack of pipeline for venture capital investments. I've spoken to a number of colleagues who are in the venture capital world, and I think you have 3 stages of companies. The first is a pure startup coming really off the shelf with an idea that's not yet tested. I think what we're seeing now in Nairobi is that there are a number of people who are willing to provide some sort of initial capital, but typically no more than about 3 to 5 million Kenya shillings. So as you are trying to attempt to launch a startup that requires significant funding, you will find it a bit difficult to access that over here. So I think there's definitely an issue of deal flow around new ideas that require less than 3 million. But as you think about a large idea that requires significant funding, there'll be an issue. The next sort of tranche is to think about those startups that are past the initial idea, they've proven the concept, they have a few customers, but they're many years away from profitability. And I think right there, it's a really interesting situation. You have few of those companies and even fewer investors willing to back those companies. And then on the other end of the spectrum are, startups that have actually now passed the startup phase. They are profitable. And once they're profitable, all of a sudden they have a lot of choices to where they go for capital. I.e., the banks are now willing to lend to them. Local investors are willing to provide equity. Foreign investors are willing to provide equity. And so you actually find a situation where there's too much money chasing too few of those sort of companies. So I think what you have to do is to figure out where do you lie in that bucket, and more than anything, try and find investors that are specialists in the stage of company that you're at, that are specialists in your industry. And you don't want to go to a traditional investor trying to sell a newfound technology and think that they'll accept it, right? So it's really a question of just matching who you are to what is out there. Right?
Thank you for joining us. Thank you for your contribution.
Thank
It
you.
has been a real pleasure.
Thank you.
We have come to the end of the show. This is iLEAD Africa. My name is Sarah Yunis, and until next time, God bless you.
Jambo, jambo, jambo,